Hi, welcome to another episode, Focus on Finance. This is Shirley Luu speaking. I'm so excited. I know some of you guys last week, you heard my brother and I were chatting a little bit about retirement account, how to have lifetime income, how you can't lose money, how you have, a guarantee payment, all those wonderful things. But today, I think we're going to switch gear a little bit. And one of the things I want to talk about today was really about leaving a legacy. It was interesting. I'll tell you a story that happened yesterday. I was speaking at an event and there was a whole bunch of people in the audience. And I said, hey, guy, can I ask you a couple questions? It was very, very simple. And by the way, the audience out there, as I'm asking you this question, I want you to reflect on what I'm about to ask you. Are you ready? The first question I had was, how many of you out there today in the audience that if your mom or dad passes away tomorrow, that can leave you $1 million tax-free, please stand up. And of course, I was looking around the room. I was hoping some people stood up. But you know what? Want to hear something? Zero, nada, not a single soul stood up. And I say, wow. So I asked them the next question. I said, do you think it's because your parents don't love you? They want to leave a legacy? Or is it because they weren't taught, they weren't being educated, or they weren't giving advice in how to leave a legacy? I'd rather believe that's the truth on that, okay? All right. So then I stopped for a minute. I said, okay, ladies and gentlemen, I looked over this guy, had a little young baby laying there. I said, how many of you said to your family that you love your family, you love your kids, you love your grandbabies, you love your daughter, your son, it doesn't matter. Stand up. Which one of you can leave $1 million tax-free retirement for your kids or your family? Do you want to hear something? Nobody stood up. One guy did say, did you say $1 million tax-free? I said, yeah, $1 million tax-free. I'm not talking about taxable. So given that said, John, why is that people believe all this thing out there and yet they don't have any of these protection for?
I think the biggest problem is that people are really not aware because they're not educated on what it is and how it can help them. And actually it's quite affordable because a lot of the stuff right now that they're spending money on, they can redivert it to this type of account where actually can benefit them, because this thing, the life insurance portion, not only covers the life benefit but also the cash saving side where you can actually grow that money for emergency in case you need it for any reason, in the event that something happens. I had a situation where I had a police officer who a few years ago took a policy out. He ran into a situation just the other day and he needed the money. The money was there for him. But more importantly, life insurance, when we talk about life insurance, I call it a life savings account because it is a savings account. So if you set a payment that's set up, the companies and carriers we work with allows you to adjust those payments. So if you're locked in at $100 a month and you run into a bind, you can reduce it to as low as $50. And if you have to reduce it to $50, if there's enough money in that accumulation account, you can drop it down to zero and not have to pay on it. But the fact is having the policy coverage is really important. I had a client who actually passed away. He had the policy for like a year or two. He was only paying like $200 a month, but when he passed away, he was able to leave $300,000 for his family. And if you look at the number, what he put in there far surpasses any type of investment vehicle that could take care of the family. So leaving a legacy protecting your family is really important.
Yeah. And people lottery, right? People love playing the lottery. I can never get it. Okay, so the lottery goes for $1 million, then they go 5 million, 10 million, you get 100 million. And then I get all my friends, everybody calling, hey, let's chip in, buy the lottery so that we could potentially win. And and the chances of winning the lottery is 1 in gazillion, trillion to win it. But yet everyone flopped to it because their dream is to create $1 million for their family or for themselves. I'm sitting there thinking, wait a minute, you want to have $1 million, isn't it easier, safer than putting something in guaranteed payment where if I put in $500 a month, I know I'm going to get a guarantee $1 million, no buts, no if about it. And that's a chance that I know for sure I'll win, no matter what, right? But yet people don't do it.
And I think this perception is that it's a debt, it's another, I can't afford it. Well, let me ask you a question. Do you drive a car? You have car insurance? Do you insure that? Do you insure your cell phone? Mm-hmm. Why not insure yourself for protection? But more importantly, I'm telling you, it's not a debt. Okay, it's an investment.
It's an asset.
And also, it's guaranteed. Where can you go get something that's guaranteed? Now, more importantly, when these accounts are done, it's really important that if these accounts are settled with anything, allocations and is really important. Diversification is really important too. So we review those your policies annually to make sure that we're going on the right path to have the right growth. I had a young gentleman and a young lady last week come into me, and we did like a $50 policy a month for them. Now, if Jennifer was not able to pay that $50, I can drop that payment down as low as $25, still have the coverage. But of course, her cash accumulation can't grow as much. But here's the thing: the beauty is that if she was to pay that $50 a month, right, in 20 or 30 years, she could have close to almost $200,000 in her account. And if she wanted to add more money, she would have even more. Now, check this out: that's based on a 3.5% growth, continuously. The average return on these life insurance policy on some of our carriers is paying between 8% to 15% or higher.
Yeah, and of course that's not guaranteed. I want to make it elaborate, okay?
Exactly.
It's not always that. It's based on the market performance, but here's the underlying issue, things where you can't lose money. So I want to make that very, very clear. And no, you cannot live off $25-$30, okay? So don't walk away with it saying, oh, they got on television, they told us, no, please.
No, right.
So one of the things we want to talk about, the rich, John.
Well, the thing about the rich, where Shirley was talking earlier about how the money goes into the account, they put it back in, they basically borrow the funds. But what the rich do is that they take the money and they reinvest it at the same time as they buy. They put the money back in and more. It basically it generates money within the policy tax-free. Now, it does take away from the, of course, face value as it goes down, but it doesn't really matter. The fact is that money's in there tax-free, and the rich uses that to leverage to get real estate money. Okay. Now, there's go ahead, Shirley.
Yeah, no, I want to elaborate when he said it takes away the face value. Okay, what John means by this is, if I have a life insurance that's $500,000 and I build up the cash value $200,000 inside of my cash account, and I took out $100,000 of the cash to buy something or to do something that I needed at that time, if I happen to pass this away immediately, it reduces the death benefit, because when I took the money out, I took it out as a loan. So they're paying back the loan so my family can get it tax-free. So Shirley had a $500,000 death benefit. She took out $100,000 while she's alive to go spending money on stuff, or she bought a house, or she needed the money just to survive, or for her illness, whatever. So 500 minus 100,000 that I took out for that investment home that I bought, remember that? Then therefore they're going to pay the family $400,000 tax-free death benefit. Yeah.
And to touch base on what Shirley said earlier about the sickness, the policies that we have has chronic illness, critical illness, terminal illness, critical injury, and Alzheimer's is covered under those policy you're currently paying your premium. Do your homework, because here's the thing: the carrier that we work with, one price, one premium. It doesn't cost extra for that living benefit, and that's really important to have, especially if you don't die, something happens to you.
John, how do they get in touch with you?
All right, my name is John Weisenberg. My phone number is 240-462-8296. Again, it's 240-462-8296. My website is CAM, CAMHELPYOU, CAM Help You, CAMHELPYOU.com.
And for most of you who always know how to get in touch with me, Shirley Luu Associates is 703-608-1203. We'd love to hear from you. When you sit down with us, there's no cost, no obligation. We want to take where you are to the next level, and we want to help you compare. Look, it's springtime now, guys. It's time for you to start considering, thinking about the future, what's happening. Tax is over with, but you need to start today. Don't let it, go without another day of looking at your finances. I've always believed in, where you are today, the only way you're going to change is if you make a move, make changes to your personal finance. So until next time, remember, you uplift others by helping them. We rise by helping others.